What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of tomorrow's trading day, Friday, January 26th. Now, Tesla here today, continuing the sell-off after, of course, yesterday's earnings report. Primarily, the driver of last night and today's movement, of course, was not necessarily the earnings themselves, the EPS and revenue results missing slightly, right? The primary driver here, at least in my opinion, is the guidance or lack thereof. Okay, so we saw a little bit of guidance. They said that they're in between two growth waves at somewhat of a plateau, and that they expect 2024 to be essentially a year of kind of filling in the cracks, so to speak, rather than spurring on such massive additional growth. So the stock here today down about 12%. And if we just take a quick peek here at the 1 minute chart on the intraday, actually a couple of interesting bounces here. This could have been seen or perceived, I suppose, if we zoom in a little more, as a potential scalp setup. But if we look here, if we look at the time that this actually came in for a test, you know, the channel was about $1.15 wide. That is wide enough. However, the setup itself, for me, I would have to pass on this. It's just slightly sloppy, this first bounce, then an early bounce. It's just not as clean as I prefer to see a setup like that for a scalp of that style. I'm really not a fan in particular of mushy bounces like that. Okay, I just wanted to point that out first here on the 1 minute chart, but let's move on to the 5 minute and continue to gain context here as we go. By the way, if you want to talk more about trading, come join our free Discord at that first link in the description. It'll give you instant access, again, absolutely free. Here on the 5 minute, though, we get a little bit more context here. We can see respecting the 9, especially the 20 period EMAs here, really until early afternoon, where we started to see some consolidation into the close as we came in to that 177.50, 180 range that we've been talking so much about here. Today was clearly a momentum day, continuing momentum to the downside, likely some, I hesitate to use the word panic, but likely some emotional continuation to the downside there, right? Which we know is very typical of a stock like Tesla. And that goes both ways, by the way. You can have emotional swings to the upside as well. But let's zoom out here and go to the 30 minute chart now. We can see here that really the most relevant indicator on this chart is going to be that 200 period that's been acting as an area of potential resistance for the 3 trading days prior to today. I expect that is an area that bears were keeping an eye on. You maybe had some bears trading off that level here pre-market yesterday. That would be Wednesday. However, moving forward, I'm going to keep an eye on that if we end up making an upside test of that here in the relatively near future. But the setup itself has kind of broken. But I do anticipate there would still be some traders watching that 200 period on the 30 minute chart. So I'll be watching it as well. I want to be keeping an eye on anything I think could have a lot of eyeballs here. Let's take a look now at the 4-hour chart, see if there's anything contextual to grab off of here. Really all we have here is a more recent potential resistance area around that 200 period here on the 4-hour. Aside from that, you have the 50 period fading downside. Really not all that relevant as of right now. But let's zoom out and look at the kind of the granddaddy of all the charts, right? The daily chart, here the 2-year daily. Let's zoom in a little bit and take a peek. So, you guys know that we've been talking a lot about this 177.50 to 180 range. We are now almost hard up against it, a couple of points away. Now let's discuss potential bullish and bearish scenarios as we head into tomorrow, Friday. Okay, let's start with a bearish scenario. Completely unbiased, let's just start there because I think it's the easier scenario to lay out here. If you're bearish right now looking at Tesla, you're short the stock, you own puts, or you're looking to enter, there's one very clear thing on your mind right now. Break downside through that 180, 177.50 region, right? Region of potential support that the bulls are looking at and the bears are looking at for potential downside break. The bulls, of course, watching that for a potential hold as kind of a backstop to maybe slow down this downside momentum that we've seen now in the last 24 hours or so. When you have momentum of this nature, one of the worst things you can see, if it's to the downside, is what I would call like an open sky setup if we were talking about upside. But on the downside, right? Where there's almost nothing there. There's no technical levels. There's hardly any psychological levels. There's nothing in the, just right in front of the stock, right to the downside, to put a stop or at least help put a slowdown to the bleeding. But here Tesla is right after a single day up against that level. And we showed, you know, the stock kind of slowed down as we headed into that level into the close here today and showed some consolidation. So it's clearly hesitating slightly ahead of this 177.50, 180 range that has been so relevant in the past. So bulls clearly looking for a respect of that level, allowing that safety net to catch the stock, holding as support. Ideally, you know, we could test it 3-4 times. I don't mind, but just in the next few trading days, getting a hard bounce out of that hole away from that level, put some distance between the stock price and that 177.50 to 180 range. If you're a bear, you want to dip down right through that, break it hard to the downside. If it comes up for a test, fine, respect it as resistance and fade hard off of it down toward that next relevant area, that 166, 167 region, right? Never the exact penny, it's always a range. Now, a couple things to consider here. First of all, volume. Today was the highest volume day. We actually have to zoom out for this. Going back all the way to June about 21st, 2023, okay? High volume, while, listen, I think some of the high volume today is emotional volume, emotional downside, and most likely contributing to that, some dip buying as well. But a lot of volume shows a particular decisiveness in the market. A lot of the market itself, the stock market, you'll know what I mean here in a second, right? The market of shares is agreeing, and by that I mean not derivatives, right? Which is what we're going to look at here in a second, is agreeing on the current state of Tesla. But what that also shows us, again, if we look at this 1 minute, is we got consolidation ahead of that 177.50, 180 region, and the market's agreeing on that. Now, let's move on to the options here. One thing I need to show you guys in relation to the options, look here at implied volatility. Let's actually zoom in here. Okay. The implied volatility here, this is really important to take note of here in the short term. You can see that we're fading hard the last day or two. Okay, it's back down to 51% off of almost 58%, but still relatively high compared to where it was early to mid-December. Okay, so if you purchased contracts, that goes for calls or puts, in the last couple of days, you've likely seen a little bit of IV crush. If you purchased them about a month and a half ago, you have likely benefited from some Vega pump, right? Some IV pump, which directly influences the pricing of those contracts through that Greek Vega. IV does, right? So let's finish out here on this video for tomorrow on Tesla with the chain itself. Looking here, big sample size, 4.678 million total contracts, 2.49 million calls, 2.19 million puts, slightly weighted to the call side, total overall call per ratio, slightly over on the bullish side. But something I pointed out on the Roensch Capital show today that's so incredibly interesting here on Tesla, look here. 1.37 million calls between that 0 to 20 delta range, the short-term speculation call options, right? 636,000 only puts in that same delta range. Those are the short-term speculation contracts that give us such a good idea of what those short-term speculators are thinking, and we're getting almost double the short-term bullish speculation as we are short-term bearish speculation. This is a heavily bullish weighted chain. The option traders, especially the short-term ones today, do not agree with this move. At the end of the day, they don't. That's the data. Don't shoot the messenger. But this is a bullish chain in the short term. But remember, this is the market, right? The masses can always be wrong. Hey, if you got value out of this video, please subscribe to the channel. This is a brand new branch off channel. It helps out tremendously. If you also wouldn't mind, leave a like on the video. Helps out very much so with the YouTube algorithm. And I'll see you in the next one.